In this video, I'm going to have an interview with Quentin, who's made 188% profit in the last 3 months. Let's find out how he did it. Okay, so I'm now on a call with Quentin. Thank you very much for agreeing to do this today, mate.
No problem.
So what I'm going to do is I'm just going to start by, we're going to start by having a look at the results that you've got. And then we're going to jump over to TradingView and I'll ask you a couple of quick questions if that's okay.
Yes, perfect.
Okay, so let's start then. So obviously, let's just point out this is a demo account and you like to backtest, you do a lot of backtesting. You've then moved to forward testing on demo and you've now gone live. But we're going to have a look at this account because it's got a couple of months of history. And if you can just talk us through it. So it looks like you started at $1,000 and you're up 188%. And I can see you've traded a few different instruments. So if you want to just quickly talk us through what you've been doing.
So basically what I did in the morning when I wake up around 7:30, I just pressed buy and sell at the same time for gold, Dow Jones, sometimes also the other pairs. Not for a specific reason, just if I felt like trading these. And I traded a grid of 500 pips for gold and Dow Jones.
Okay.
And if price got to that level, I closed it and immediately opened a new trade. So basically just pressing buy and sell at the same time. All based on the fact that price will eventually come back.
Right, okay. So we'll go into this a little bit more when we jump over to TradingView. So we'll sort of see what that looks like on the chart.
Yeah.
Which have been your best performing instruments? So out of the stuff you've traded, what's made you the most?
So the most earning pair was gold, but
Okay.
it was also the most trades and also the pair that cost, in the end, the most drawdown. If we take a look at Dow Jones, for example, it made less money, but it's also less trades. And what I remember is that I was in way more gold trades, and sometimes I struggled a bit more to get out of trades compared to Dow Jones. But yeah, these were the pairs that made the most money, definitely.
Yeah, so this is similar to my experience. I find that Dow Jones is more efficient than gold. You will pay more fees at the broker trading gold, whereas with the Dow, you'll actually get to keep more of your profit. So
Yeah,
that looks like you've had the same experience. So will you be continuing with gold going forward, or are you going to move on to the Dow?
I will just stick to the Dow. Also because I noticed in the past week that gold can just trend in one direction without a single pullback. So some weeks can be very good,
Yeah.
and there can be one random week without any like major news events and just cause a lot of trouble for your account.
Yeah, that is a characteristic of gold. It's the nature of the instrument. So obviously people can pause the video and have a look at the stuff that's on the screen now. Let's just quickly jump to the calendar and let's have a look at your sort of day by day over the period that you've traded in. So if you want to go back to the point when you started. Okay, so you started at the end of September and you're showing 70% gain in, it looks like 4 days in September.
Yeah. So I started with way more risk in the beginning. Obviously, because you're on a demo account, you're like, let's just risk more. Let's just trade
Yeah.
a smaller grid. And it worked out very well, but I quickly saw like I need to lower my risk because I don't think I will actually be doing this on a live account.
Yeah.
So I was trading a lower lot size, a bigger grid, and the results continue to be very good. Overall, I didn't have big drawdown. I think the biggest drawdown I had was around €40, and it was on gold. And every single day I made around, let's just say 20 to 30 euros on a €1,000 account, trading a pretty small lot size.
Yeah.
And right here I was on a holiday, so I didn't trade for a couple of weeks. And right when I came back, it was great again.
Okay, so what I can see is if you just go back to the previous one for me, go back to November. So your holiday period aligns quite nicely with the US election, and obviously you wanted to avoid that anyway because
Yeah.
it's not a great period to trade. But what I can see is that you've been very consistent in the periods that you have traded. If we ignore the initial 4 days when obviously you were over risking, since then you lowered your risk to a sensible level. In fact, if you go back to the month just before, if you go back to October for me, so we can see that's pretty awesome. It's 42%, and if I just look weekly there, I think you've got 3 weeks at 7% ish. Yeah, that's pretty. You can see the consistency there. So obviously you've nailed your risk at that point, and you're sticking to the strategy well. So what I'll do now, I'll just quickly ask you 3 questions, relatively short answers, and then we'll jump over to TradingView, and I'll start to ask you about the strategy, and you can point things out on the chart and stuff like that. So
Okay.
first of all, then, how long have you been trading, sort of in total?
About 2.5 years.
Okay. So what strategy have you been trading with this to get these results?
The day trading strategy.
The day trading strategy, right? Okay. And obviously you've done that on different instruments, and we will look at this a little bit closer on TraderView in a sec. And then how long have you traded the actual day trading strategy? How long have you been trading that for?
I know the strategy for almost 2 years now, but actually trading it, I think like 3 months.
3 months. So that's interesting. So you did the course about 2 years ago. So what happened? You didn't start trading it. What did you do after that?
I was trading it on a demo account for I think like 2 weeks. And since I was in the beginning of my trading journey, I thought that I could find a better strategy. And that is what most people do. They find a strategy, it works, they leave it behind, look for something else.
Yeah.
That is what I did until I came back about a couple of months ago.
So it's kind of like chasing the holy grail. You always want something better. And I mean, when you're a new trader, it's perfectly normal to strategy hop. You've got to look around. You've got to try things out. I actually recommend people do it because you have to work out what you like. But it's interesting that you came back to this, and then when you've actually sort of knuckled down and put the effort into mastering it, you can see that you've actually done it quite quickly, and you've had some really consistent results, which is awesome.
Yeah,
So are you sticking with this now? Is that your plan, or are you going to look for something else?
definitely sticking with this because I know it works. I have a good risk management in place, so yeah, I'm very confident with this strategy.
Okay, awesome. Right, what I'm going to do is going to pause the recording now, and then we'll jump over to TradingView, and you can talk us through the strategy in a little bit more detail. Okay, so we've jumped over to TradingView now, and I'm just going to ask you a couple of questions. So just obviously take your time, tell us anything that you feel is relevant, and if you need to show us stuff on the chart, you can obviously do that. So the first thing I want to ask is, have you changed anything in regards to the strategy? Have you changed any rules, any distances on the trades, anything like that?
For gold, I did not change anything, and for Dow Jones, I changed quite a bit.
So just
Uh,
quickly, while you're on gold, what levels are you using? How far apart are the lines?
there were 500 pips each.
Okay.
The only difference, well, the odd thing with gold, but it worked very fine for me, is the moment I open a trade. So let's just say I open a trade right here in the beginning of my session, which is 7:30.
Yeah.
From there, I place this grid, and if it goes down 500 pips, I add to the losing position. So it's not on a fixed number, it's just from the moment I open a trade.
Okay. That's quite a big change. That's very interesting. So 500 pips. It sounds like you may be fitting this to the movement of the instrument, more like trading based on the ADR, so the range of the instrument. So at the point you start trading at the start of the session is what it looks like. I can see the session lines in the background. That's the coloured area on the chart. So when you enter your trade, you're just using a fixed distance from that entry point then, rather than round numbers on gold.
Exactly.
Okay, so that's quite significant, and obviously we can see that your results have been very good that we've just seen on that. So that's a really good thing for people to consider, because I get a lot of questions about gold. I myself don't trade it, so if you are thinking about trading gold, maybe try what Quentin has done at the point when you enter. Set your grid distance from that rather than from the fixed round numbers. Okay, so that's the first handy little tip you've pointed out there, Quentin. Thanks, mate.
No worries. And I think 500 pips is a good distance because 1000 pips is too far. Anything less than 500 can be like too much, like you will be in too many trades on these levels
Yeah,
because right here we have a quite big move.
yeah.
And you will be, if you open a buy here, it's like one, two, three, maybe four trades. Otherwise, you'll be in eight. And that's pretty nerve-wracking.
Yeah, so I mean, you can see instantly how volatile gold is. I mean, it looks like a heartbeat on the screen right now. It's just up, down, up, down, up, down. But
Yeah.
also look at the size of some of the moves. So yeah, obviously you have to have a much larger grid size. Otherwise, you're going to trigger a load of trades and be in a ton of drawdown. So that's really helpful. Thanks for that. If you want to jump on the Dow, then just talk us through the Dow and let's see how you've done that.
All right, so right here I am using the 250 levels,
Yep.
the 50 levels. So between these 250 pips, I have a lot of 50 crits right here.
And I take it you're using sort of normal strategy in terms of the 250s are your decision points and then the 50s are your entry points.
Exactly.
Okay.
It's just a normal strategy.
Right. Okay. Have you changed anything at all for the Dow?
Well, I have changed some stuff regarding my entries. So what I'm doing, I am buying and selling at the same time.
Okay.
I do not have a bias, so I don't zoom out. I don't look at anything regarding that. So if you zoom out, you can see that we're in a downtrend.
Yeah.
But for example, Friday, which was here, yeah, right here, I was buying and selling, and I made 50 euro on a 100 euro account, so 50% with almost no drawdown.
Yeah. Now, I've discussed this a lot of times in the group, and I did mention it in the course. And in fact, in the advanced content, which is the advanced version of the 50-point strategy, I do mention that it is entirely possible to trade both ways. The reason I don't recommend it to people is because it's much trickier to do. It requires more management because you're essentially trading, well, you are trading both ways at the same time. You are running two grids, aren't you?
Yeah.
So there's more to manage, there's more to do. But it's clear that you're at that point where you've been doing this for a couple of months now and you're confident doing it and you're getting the results. So that's really interesting. What made you choose to go both ways then instead of choosing a bias?
I was talking with Flanker, and Flanker has been doing this for quite a while,
Yeah,
and he made a pretty big amount of money in a pretty short period.
yeah, he did,
And
yeah.
yeah, he based it all off on something that you said.
Yeah,
That I'm not too sure about the percentage it was, but the percentage is very small that trades will go 10 zones against you on the Dow Jones. So that just made me think, why try to predict the market? Why don't just go both directions? Try to make as much money as you can,
yeah,
and eventually you might blow your account. But the goal is before that to try and like 5x or 10x your account. And I personally think if you buy and sell at the same time, just not at stupid levels. And what I mean with stupid levels, if price goes from here to this round 250 level,
yeah,
don't just buy here. That makes no sense.
yeah,
Use a little bit of your brain. I think buying and selling at the same time or in the same like period. So for example, buying here, selling here, that can be completely fine.
yeah. So you have to do it in a structured, let's say, intelligent way. There are obvious places that are not good to go
Yeah.
both ways from. And there are places like, so for example, in the middle of a 250 zone, you are the same distance, or roughly the same distance, to the next 250 level in both directions. So
Mm.
how bad can the drawdown get? And you know there's a very good chance it's going to bounce from the 250s. So that's the conversation that I had with Flanker and many other people as well. And there's a few people that have done this and, as we said, made a load of money from it. I'll also try and get a call with him to see how he's done it, if he's done anything differently. But yeah, I think you've done this in a very interesting and very intelligent way. You're aware that there's risks. Now, one thing I do want to touch on is resetting the account, because you kind of mentioned it a little bit there. Is yes, the account will blow. It will definitely blow if you trade both ways all the time, and especially if you do it at high risk or if your levels are too close together. These things all increase the chance of it, but it survives surprisingly long periods, and it will just keep making money for that period of time. Now, if you just keep trying to compound the account and make more and more and more, you are going to lose it all. That is a mathematical certainty, okay? So you have to reset the account, you have to lower the risk. Now, you mentioned maybe targeting 5x.
Yeah, I
So,
think that's my goal for now.
yeah, so in that case, then, when it reached 5x, you would then withdraw. And would you go back to your initial starting balance, or would you go back to a slightly higher balance? How would you do it?
I will just take out the 400, try to do it over, and if I then go from 100 to 500, I will probably just take 100 euro out and do it like that.
Okay, so you would initially have a big withdrawal, make yourself risk free, and then you would try again. And then the next time you would only take a little bit of profit out, leave more in, and try to make more money per trade with a larger balance the next time.
Exactly.
Okay, that's what I recommend to most people. That's a really good approach. You want to get yourself risk free as quick as possible. So in the previous call that I had with Kevin, he's now in that position where he turned, I think it was 100, and he got it to like, he was up 1200%. He withdrew 500 euros out, and then he's now starting with obviously 500 euros on his second account as opposed to 100 euros on the first one. So he's at a slightly higher balance.